Hey everyone, welcome back to Corporate Decoder, the place where we try to find out if a company is secretly playing musical chairs with its leadership today. We are diving into a fascinating filing from Flora Corp. This report tells a story of change and a substantial payout to a key executive, a story that might tell us more about the company's future than any balance sheet. So what exactly is this document? It's a Form 8, a current report that companies file with the Securities and Exchange Commission when major events happen, things that investors really need to know about right away, like a big leadership change or a significant deal. Flora Corp is the company we are looking at today. You might know them from their work in the cannabis industry, focused on growing and selling cannabis products. This report was filed on the 23rd of December of 2025. But the main event happened a few days earlier on the 19th of December. This is when things really kicked off. It gets right to the point for us. The big news is about the departure of their former chief executive officer and a current consultant, Clifford Stark. The company and Mr. Stark entered into this separation agreement, and it sounds like a pretty comprehensive handshake to part ways. It basically lays out the terms for how their relationship is ending. Now, Clifford Stark was not just any executive, he was the chief executive officer and was also a consultant. This suggests he was still involved in a high-level advisory capacity even after stepping down from the CEO role. The filing tells us his employment with the company officially ends on the 19th of December 2025. This is the crucial date for all the arrangements that follow. This is an interesting tidbit. Remember, back in September, Mr. Stark had already resigned as CEO, and from the board it seems this December agreement is the final unbundling of his ties to the company. Good news for the company and investors to hear this statement says, Mr. Stark left on good terms, not because of any major disputes or problems. This is important because it suggests the company's core operations weren't rocked by his departure. This part shows a continued connection even after his resignation. He was still lending his expertise to the new CEO. This indicates a desire for a smooth transition and continued guidance. This is standard legal language in these agreements. It means both sides are agreeing to put all past potential disagreements behind them, wiping the slate clean, which reduces future legal risks for the company. Here is where it gets really juicy. The termination entitlements are the payments and awards Mr. Stark will receive. As he leaves, this is often a significant part of an executive transition. First up, a nice chunk of change, $895,000 in cash. This is a direct payout to Mr. Stark as part of his separation. It is a substantial amount reflecting his position and contribution. In addition to cash, he is also set to receive 13,000 restricted share awards. These are shares of the company that he will get over time, usually tied to certain vesting periods or conditions. This is a way to keep former executives invested in the company's future performance. Even after they leave, the plan itself has been amended a few times, showing ongoing adjustments to their compensation strategies. This clarifies that the 13,000 shares are it. He won't be getting any new equity awards for his work or performance in 2025 or into 2026. This sets a clear boundary on his compensation from the company going forward. This is a common legal disclaimer. They are telling us that the description provided is a summary, and the full official details are in another document, the separation agreement itself, which is filed as an exhibit. This means if you need the nitty-gritty, you have to read the actual contract. Now, we are in the section where they list all the extra documents that are part of this filing. Exhibits are essentially attachments that provide more detail on the information presented. This confirms that the actual separation agreement is attached as Exhibit 10.1. This is the document I just mentioned where all the specific terms and conditions are laid out. Exhibit 104 is the cover page in a format that computers can easily read called interactive data. This is part of the SEC's push for more machine-readable financial information, making it easier for software to analyze filings. This is the signature block. Companies have authorized individuals sign off on these reports to confirm accuracy. This is the date. The report is officially signed and submitted to the SEC. This indicates that Danny Vayman signed the document electronically. And finally, Danny Vayman is the Chief Financial Officer of Flora Corp, making him the authorized person to sign this report on behalf of the company. So what does all this tell us? Flora Corp is going through a significant leadership transition. The departure of Clifford Stark as CEO and consultant comes with a substantial payout of nearly $900,000 in cash and a grant of 13,000 restricted shares. This is a considerable cost for the company. And it signals a new chapter. The fact that Mr. Stark's departure is reportedly amicable is a positive sign for stability. The company is now clearly moving forward without him as a direct leader. And this separation agreement likely represents the final financial settlement for his tenure. Looking at the broader picture, the costs associated with executive departures can be significant, and this payout reflects the value the company places on a smooth transition and avoiding potential legal disputes. However, it's also a large outgoing expense that needs to be absorbed by the company's financial resources. The continued granting of restricted shares, even in separation agreements, shows a strategy of trying to align the interests of departing executives with the long-term success of the company. What this filing doesn't explicitly detail are the company's current financial health or its future strategy. Those would be found in other reports like the 10Q or 10K filings, however, this 8. K is crucial because it highlights a major event that could impact the company's direction. And investor confidence, in my opinion, Flora Growth Corp handled this transition by opting for a clean break with a solid financial package for their former CEO. This suggests a commitment to clear governance and a desire to avoid lingering issues. The substantial payment indicates a recognition of Mr. Stark's past contributions, but also a clear intention to move forward with a new leadership dynamic. The key takeaway here is the cost of this transition and what it means for the company's immediate financial priorities. Will this impact their ability to invest in growth, or will they manage it smoothly? That is the question investors will be watching. Alright, that is our breakdown of Flora Growth Corp's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps. And subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.